Greetings, financial enthusiasts! Today, we're delving into the fascinating realm of stock markets, unraveling the mysteries behind their colossal size, and exploring the economic giants that dominate this financial landscape. Imagine a bustling marketplace, but instead of fruits, vegetables, or clothes, people are buying and selling shares of companies. That, in essence, is what a stock market is. It's a hub where buyers and sellers come together to trade shares of publicly listed companies. But it's not just about buying low and selling high. The stock market plays a critical role in the global economy, influencing everything from small businesses to multinational corporations, from your personal finances to national economies. In this video, we'll explore the dynamics of stock markets, their importance, and the key players that make them tick. So buckle up and prepare for an enlightening journey into these economic powerhouses. Let's start this journey by understanding the basics of stock markets. Stock markets are platforms where buyers and sellers trade shares of publicly listed companies. These bustling hubs of economic activity operate on a simple yet powerful principle. Imagine you're an investor. You buy shares in a company, essentially purchasing a small slice of that company. Your hope is that the company will perform well, causing the value of your shares to increase over time. This is the fundamental concept of buying and selling shares. But remember, the value of shares can also decrease, making the stock market a place of potential risk and reward. Alongside this, stock markets also provide companies with access to capital. Companies sell shares to raise funds for various purposes, like expansion, debt repayment, or even launching new products. Now that we've understood the basics, let's dive into the fascinating comparison of market capitalization versus GDP. Ever wondered why stock markets are often larger than a country's economy? Let's take a minute to unlock this financial conundrum. It all circles back to a term you may have heard: market capitalization. But what exactly is it? In the simplest terms, market capitalization is the total value of all listed companies' shares on a stock exchange. Imagine each share of every company as a tiny slice of pie. When you add all those slices together, you get the entire pie, which represents the market's total value or capitalization. Now, let's compare this with gross domestic product or GDP, which measures the overall economic activity of a country. It includes all goods and services produced within a nation's borders in a given period. So when we say that a stock market is bigger than a country's economy, it means that the total value of all publicly traded companies on that market surpasses the country's GDP. But how can this be? Well, it's essential to remember that stock markets are not confined to national boundaries. They represent global businesses, attracting investment from all corners of the world. This global reach can significantly inflate a market's size, often making it larger than the economy of the country where it's based. On top of this, market capitalization is a forward-looking measure, often reflecting investors' expectations of future profits. In contrast, GDP is a backward-looking measure, based on the economic activity that has already occurred. Therefore, if investors are optimistic about a company's future, they're likely to buy its shares, driving up its market capitalization. Speaking of large markets, let's take a look at some of the economic powerhouses. These are the stock exchanges that have grown so vast that their market capitalizations often outstrip the GDP of many countries. Strap in as we embark on a journey into these financial behemoths. Leading the pack is the New York Stock Exchange, the behemoth of stock markets. This powerhouse is a testament to the sheer magnitude of economic activity that takes place in the city that never sleeps. As the world's largest stock exchange, the NYSE is home to some of the globe's most influential corporations. Its market capitalization, a staggering figure that far exceeds the GDP of many countries, is a reflection of the vast wealth generated by these corporate giants. The NYSE is not just a symbol of American economic might, but a global hub where fortunes are made and lost, where the pulse of the global economy can be felt with every trade. It's a place where dreams become reality, where the ambitious and the fearless come to stake their claim on the future. From the traditional trading floors of NYSE, let's move to the technological marvel, NASDAQ. Enter the NASDAQ, a technological marvel. Unlike traditional stock exchanges, NASDAQ has embraced the digital age, revolutionizing the way we think about trading. It's not just a marketplace, it's a digital frontier where the world's most innovative companies like Apple and Amazon make their home. Here, trading is not conducted on a physical trading floor, but rather through a seamless electronic network. This digital platform, accessible from anywhere in the world, ensures a fast, efficient, and transparent trading process. It's the epitome of modernity in the financial world, a testament to how technology can transform traditional structures. Beyond its digital prowess, NASDAQ has become a beacon for technology and innovation. It's a hub where tech giants and ambitious startups converge, setting the pace for technological advancements. The NASDAQ isn't just a stock market. It's a symbol of the digital age, a testament to the power of technology in shaping our economic landscape. From America, let's traverse the Pacific to the Tokyo Stock Exchange. Across the Pacific, we find the Tokyo Stock Exchange. This is Japan's premier platform for trading securities and a beacon of economic might in the East. Established in the late 19th century, the Tokyo Stock Exchange, or TSE, has grown to become the third largest stock market in the world by market capitalization. It is home to some of Japan's and the world's most renowned companies, from automotive giants like Toyota and Honda to technological innovators like Sony and SoftBank. The TSE's influence extends beyond Japan's borders, shaping financial trends and contributing to global economic growth. It is a testament to Japan's resilience and innovation, and a symbol of the country's global economic stature. As we delve into the intricate workings of the TSE, we gain a glimpse into the heartbeat of Japan's economy and its significant role in the global financial landscape. Leaving Asia, let's travel to the heart of Europe, the London Stock Exchange. Our journey takes us to the heart of Europe, the London Stock Exchange. It's not just a financial hub, but a vibrant marketplace that throbs with the pulse of the global economy. The LSE, as it's fondly called, is not just about numbers and shares. It's about people, companies, and the countless stories that intertwine to form the tapestry of the European Union's complex economic ecosystem. Here you'll find a diverse array of companies, from fledgling startups to established multinational corporations, all coexisting within the dynamic landscape of the LSE. Each one, in its own unique way, contributes to the rich and varied fabric of Europe's economy. The LSE, with its deep-rooted history and forward-thinking approach, embodies the intricate interplay of tradition and innovation. It's a place where past, present, and future come together, shaping not just Europe's economy, but the world's. Now, let's delve into why these stock markets are often larger than economies. So, why are stock markets often larger than economies? If you've ever pondered this question, you're not alone. After all, it's a bit of a head-scratcher. But the answer lies in a combination of factors, each playing a unique role in the grand tapestry of global finance. Firstly, consider corporate expansion. As companies grow, they issue more shares, which in turn increases the overall value of the stock market. Then there's global trade. In our increasingly interconnected world, companies often have far-reaching operations that span multiple countries, thereby boosting their value on the stock market. And let's not forget about investor confidence. When confidence is high, people are more likely to invest, driving up stock prices and swelling the size of the market. So there you have it. Corporate expansion, global trade, and investor confidence, all contributing to the colossal size of stock markets. We hope this exploration into stock markets has been insightful. And there you have it, financial explorers. We've journeyed together through the remarkable world of stock markets, unveiling their colossal size and the economic powerhouses that dominate them. We've demystified the basics of stock markets, compared market capitalization to GDP, and visited some of the world's most influential stock exchanges: the New York Stock Exchange, the NASDAQ, the Tokyo Stock Exchange, and the London Stock Exchange. We've also delved into why these markets often exceed the size of economies, shedding light on factors like corporate expansion, global trade, and investor confidence. This journey has shown us that stock markets are more than just platforms for trading shares. They're dynamic ecosystems that shape our global financial landscape. If you found this exploration insightful, do give us a thumbs up. Don't forget to subscribe to our channel and hit that notification bell for more enlightening financial adventures. Until next time, happy investing!